Hey everyone, and welcome to Talk ETFs, ETF.com's weekly video series. My name is Sumit Roy, and I'm Senior Analyst here at ETF.com. This week, I'm speaking with Ed Egilinsky, who's a Managing Director at Direxion, an ETF issuer focused on leveraged and inverse ETFs. Ed, great to have you on the show.
Yeah, great to be back. Good seeing you.
You too. I got to ask you about Nvidia, Ed. We just got the Nvidia earnings, and the stock has been a little bit volatile after the results came out. First, it went down, then it hit a new all-time high, then it went down again, and I'm looking now, and it's in the green once again. What's your take on the results and the stock price action?
Well, I think when you look at the numbers, they were overall very strong, but the forward guidance may have not been rosy enough for some. The stock, as you mentioned, hit an all-time high this morning, sold off a bit, has come back. So I think you got something for both the bull and bears here. For the bulls, Blackwell's starting to ship and strong demand for it. In fact, demand exceeding supply. For the bears, although the stock is up 190% for the year, over the last 5 months, it's been relatively flat. So some short-term traders might feel the bloom is off the rose. As a result of that, seeing a little action in both the 2x bull NVDU as well as the inverse bear NVDD.
What's your take, or what are you hearing, Ed, in terms of the longer term outlook for Nvidia? I know there's a lot of uncertainty. The stock has tripled this year, but there's a lot of questions about what's going to happen. Not next year necessarily, that's looking strong, but beyond that. Do you think that, the stock is already priced in everything, or there is the potential for it to move up from here?
Yeah, Direxion, we're really focused on short-term traders. So headlines trading off of that, such as the earnings yesterday, pre and post earnings, is what our vehicles are designed for. But with that said, Nvidia really needs to continue to stay ahead of the competition through innovation. So that's a big question mark. Are they going to continue to be able to lead the pack? It is a gauge for AI growth prospects. So you could look at customers such as Microsoft, Amazon, and Meta and see what they're spending to maybe also gauge the upside potential for Nvidia. The stock's definitely richly valued right now at these levels. And the question is, can they keep up the growth rate to justify the multiple? And then you have the wild card of the new administration coming in and their stance on tariffs and the potential impact that could have on both their China revenue and the hurdles it could represent maybe for their current major supplier, Taiwan Semiconductor.
Ed, you mentioned the NVIDIA ETFs that you have. Can you tell us a little bit more? What kind of demand are you seeing in those funds, the long and the short version? Have people been piling in recently, or were the money put in earlier this year?
I think it's been a combination, but a little bit earlier in the year, it's subdued a little bit, both on the bull and bear side. But when you look at year to date, NVDU, which is our 2x bull product, is one of the top 10 year to date inflows for the firm. And we have over 85 plus ETFs. And in general, our leverage and inverse single stock suite is approaching 5 billion in assets. And, like I said, many traders look to headlines, and of course, earnings is one of those, to trade both the single stock as well as our broader suite of leverage and inverse in general. One of the things I'll say is there are other competitors entering the space, especially in the single stock side of leverage and inverse. They just don't have necessarily the economies of scale we do, the 15 plus years of experience in providing leverage and ETF exposure. And why do I reference that? Because when you look at some of the competitors relative to our 2x NVIDIA bull NVDU, since we increased the leverage point to 2x the beginning of April, we have tracked better relative to peers. So we're not condoning holding these long term, but when you look at the tracking, that's important to investors or traders in terms of the tracking day to day.
Great point, Ed. I want to ask you a little bit more about the single stock ETFs because you mentioned you hit $5 billion in AUM in that segment. Tesla is one of your really big funds. I think it has 3.3 billion or so. TSLL is the ticker there. What are you seeing in terms of that ETF and in terms of Tesla in general?
Well, when you look at Tesla, of course, it's always polarizing with Musk, and then you have now the affiliation with the administration, what that might mean to Tesla, and do they have some competitive advantage in the EV space? Only time will tell with that, but Tesla stock has certainly rallied significantly over the last month or two. But we just launched some additional pairs of leverage and inverse single stock. A number of them are focused on semiconductor. So we have a 2x bull, non-leverage inverse bear on Broadcom, Micron, and Taiwan Semi. The outlier there is the streaming giant Netflix. We also have added to the mix as well. But when you look at NVIDIA's earnings, back to NVIDIA, what's the impact on the broader AI and semiconductor space? We have a number of ways you can trade that. You can trade a basket of AI stocks, which include NVIDIA, and of course, Snowflake comes to mind with earnings yesterday and how well it's performing today through our 2x bull and bear AIBU and AIBD, which tracks the Selective US AI and Big Data Index. And then also NVIDIA is a bellwether for the semiconductor space. And of course, our largest fund is the triple leverage semiconductor based off the NYSE Semiconductor Index, SOXL, and we also have the bear SOXS. But one thing I just want to note, and we've talked before, is our leverage and inverse ETFs are designed for short-term active trading, and they need to be monitored daily. So that's very important when we talk about all of these leverage vehicles. The timing matters, and they're path dependent.
Absolutely. Well said, Ed, and a ton of great insight. We're going to have to leave it there. Thanks so much for your time.
Have a good day.